4 years after the Bank of Ghana and Securities Exchange Commission closed down more than 400 institutions, no one has been convicted for causing the collapse. Also, 1.7 billion Ghana cedis out of the total of 27 billion Ghana cedis in assets have been recovered from these shareholders. Former workers of the now defunct institutions who still struggle to make ends meet feel they are being punished for their previous employers' wrongdoing. On Total Recall, Joy News' Daniel Dazi takes a look at the cleanup and its impact.
The morning of the 14th of August, 2017 was a restful day for Ikea, a 36-year-old single mother who had been working in the banking industry for 10 years.
I was on leave, actually, so I was home, listening to the morning news and breakfast shows as usual. And then I overheard it. I heard it over the radio that Capital Bank and UT Bank had been taken over by GCB.
And some selected assets of UT Bank and Capital Bank. The premises of UT Bank and Capital Bank will be rebranded as branches of GCB Bank. And all customers can continue to do normal business at these branches. Their continuous operation could have jeopardized not only their depositors' funds, but also posed a threat to the financial system.
The announcement triggered a series of events which changed her reality and that of her 6-year-old daughter permanently.
We went to the office in the morning and we were handed over our letters. So I went to the Uber office. It was some way, because I met all men in queue. You know, because I'm a woman, I'm unable to do the peak hours. What I get from doing Uber is daily upkeep. Food, utilities for just myself and my daughter. Yes, so for that one, Uber is able to do for me. But when it comes to major maintenance on even the car, where I had to purchase like a car battery for like 400 Ghana cedis, and it's a challenge, and even my rent.
Ikea is one of the over 5,000 workers in 7 banks who lost their jobs as a result of the financial sector cleanup. Eventually, over 400 financial institutions closed their doors over the next 3 years, leaving many lives and livelihoods in peril. Another face behind these numbers is Jemima Mensah, who recently started a catering business.
And it's still not easy because this money in this shop is not for spending. It's for turning around. We turn things around here. So you don't get any money from it to solve your problems. So things are still hard. But since we have this, and it means there is still hope to do something. So now the washing have stopped. I've graduated from washing to catering.
Though Ikea and Jemima do not agree with the actions taken by the Bank of Ghana, consultant Nana Otio-Champon explains Dr. Addison and his team took the best possible course of action.
The justification, partly, some were weak in terms of capital, in terms of corporate governance, and in many other areas like risk management. So allowing them to stay on was one option, but not the preferred option, because sometimes a system will be so broken that your only alternative is to get rid of it and start afresh.
He is, however, disappointed that little progress has been made in recovering the lost funds from the shareholders of these institutions.
Some 27 billion of assets have been identified by the receiver. We've been told that so far 1.7 billion has been recovered. Why? Partly because the auditors again are turning around to tell us that the assets were overvalued.
On phone this evening is Alhassan Andani, who is former president of the Ghana Association of Bankers and former MD of Stanbic Bank. I'm grateful for your time, Ms. Andani. You stated repeatedly that the closure of the banks was necessary at the time of the cleanup. Do you still stand by that position?
Yes, I do still stand by that. It was a toxic situation that needed to be contained so that the industry could regain its strength and confidence and trust.
Now, the prosecution seemed to focus on former shareholders and customers, including some staff and Bank of Ghana officials. Who do you think is most responsible for this?
Well, look, I think the responsibility for a sound management of a bank, number one, rests with the board of directors, executive management, and the staff. So in order of responsibility, it's the board of directors who have overall responsibility and of course, delegated to the executive management of the bank. And of course, at the end of the day, all the staff of the bank have responsibility to superintend the assets and trust of their customers. So this is the order of priority I see in terms of responsibility.
And having said that, are you satisfied with the pace of prosecution and the recouping of funds?
I honestly haven't followed the prosecution. I think for me, essential thing would have been to really get to the bottom of the quality of those assets and how they were created so that we first can recoup those assets. And then if, for example, you found out that monies went out and no assets were acquired, then you can just be talking prosecution. But it has to go hand in hand. Determine the quality of the assets, identify all the assets that were formed and the quality thereof, and then try to recover that. And of course, the impropriety can then be punished. If we just only focus on the impropriety without tracing the assets, then we are not really dealing the problem.
But we understand the auditors have changed the value of the assets to be recouped, which would ultimately change the amount of money to be realized from the cleanup. What do you make of this?
I'm not sure auditors change anything. What auditors do is that they discover. They discover value of assets. So if a bank held an asset and called it 100 million, and then another auditor comes and discovers the asset at point of valuation is 80 million, the auditor didn't change it. They only discovered the value. So that's what I'm saying. Trace the value creation process and make sure that whatever we thought the banks were sitting on were the right numbers and that we're recovering the right thing. But putting the auditors in was to discover the true value of those assets.
Ms. Andani, in as much as the cleanup you say was necessary for the financial sector, many workers and customers are still yet to recover from the impact of the cleanup. Would you say the system treated them fairly? I mean, and how do you want them to recover from this shock?
Look, I think this comes to just everybody understanding the modern economy of running company, and that everybody has responsibility ensuring the soundness of the institutions that employ them and in which they put their invested funds. So for me, it's unfortunate, that when an institution collapses, the first people hit would be the clients, because they were sold the promise and they took the promise and they've been let down. That's terrible. You shouldn't do that. The second would be, of course, the board and executive management who were superintending over the promise sold to clients. And for me, again, the front line, the face of the issue are the staff. How much did the staff superintend to make sure that the organizations that was employing them and looking after them were properly run? And every institution has checks and balances that ensures that there is an alarm system, there is a whistleblower system, there is a process by which you can raise concerns so that things can be dealt with systemically. So if after things have dropped and we now tend to look at only maybe some segments of the stakeholders, I think we'll be missing the responsibility. For me, the great lesson in there is for every member of staff to understand that once I'm employed, I have responsibility to ensure that the organization that employs me is properly run. And if I see something, hear something which is untoward, I will report it. And that for me should be the biggest lesson.
So how strong is the sector now, 4 years after the cleanup?
Well, I mean, I follow what the Bank of Ghana reports in terms of the MPC reports and their reports. And I think if you look at the just ended year, and you look at the published numbers, the banks are showing very strong balance sheets, very strong income statement, very strong deposit, and most of the the ratios for measurement of a good bank, your capital adequacy ratio, liquidity ratios, profitability ratios, all look great. So it will look like, yes, there's been a good turnaround, and the industry from the published numbers that I've seen is looking really good.
I'm grateful for your time. Alassane Ndani is former president of the Ghana Association of Bankers and also former MD of Stanbic Bank.